Welcome back. Let's get into that market picture now. In China's strongest consumer inflation in nearly 8 years won't deter the central bank from cutting a key interest rate this week, as slowing economic growth is becoming a much bigger concern for policymakers, traders and fund managers. Over in Hong Kong, though, that economy sank into recession for the first time in a decade in the third quarter. Government data confirming the news, which is, of course, weighed down by increasingly violent anti-government protests and the escalating US-China trade war. Investors were also eyeing developments in the China-US trade talks. Both parties had constructive talks, as they say, on trade in the high-level phone call on Saturday. It was a good day, though, across Asia, with Hong Kong's Hang Seng even managing to pick up more than 1% to close at 26,623 points for that Hang Seng. Now, quite critical, of course, it has had a turbulent week, but coming back quite significantly on that front. The Nikkei in Japan was 0.5% better off, so that sits at 23,416 points, while the Shanghai Composite out in China moved 0.33% better off, 2,909 points. Quick look at the United States now, and Wall Street's main stock indices closed at record levels last week. A lot of that was fueled by fresh optimism over potential calming of US-China trade tensions and by big gains in shares of healthcare companies in particular. The benchmark S&P 500 tallied its sixth straight week of gains, its longest such weekly streak in about 2 years, while the Dow Jones breached 28,000 points for the first time, picking up 0.8%. Three-quarters of a percent, should I say, to 3,120 points for the S&P 500, while the Nasdaq Composite added a similar mark, closing at 8,540 points. Well, let's take a move now and see how things are faring out in the European market. Well, that certainly has shifted along, marking its way, of course, with regards to the China-US trade tensions and how that fares. And that has simply changed exactly how this market then looks. So it's a bit of a mixed picture thus far. The FTSE 100 in London doing very well, while the CAC 40 and the DAX in Germany are not necessarily doing as well as one would have hoped. On the local front then as well, of course, a lot of company news has certainly come out. So earnings still in the picture. The all-share managing to tick higher now. It's at 56,465 points, just below 70,000 points for the industrials, while the financial counters not doing too well and perhaps may face some nervy times considering the testimony of Lord Peter Hain, but a whole lot more still expected to come out of that. That's the state capture inquiry there as well. Then onto the commodity shares. Well, the resources going higher above that 46,400 point mark, but down, however, for gold shares and the platinum counters as well, so not doing too well on that front. While over into your commodities picture, well, below 1,500 for the price of gold there, 880 then for platinum, while Brent crude manages to tick just a little bit higher and shrugging off the possibility of more oil sort of sitting out in the United States in terms of supplies. Over to your currency picture then as well. Then, as you can see, the local rand still hovering in positive territory, if you want to call it that, because it is just below 15 rand, and that has been a key level of late. It is weaker, however, today compared to where it closed off. 14.76 for the US dollar, 19.13 for the pound, and 16.32 for a euro. A quick look then at how the British, or rather the BRICS currencies are doing at present as well. The real out in Brazil sitting a touch lower, while the yuan of China as well is a bit weaker. Russia's ruble also just faring negatively today. Let's head our attention now to the Johannesburg Stock Exchange. My colleague Bright Kumalo is there, of course, then from Vestact Asset Management, joining us today. Bright, thank you so much for the time. 0.75% up or thereabouts for the JSE All Share. It's a much better start to kick things off this week.
Yes, it's it's a nice recovery as compared to last week. I mean, the markets, the last 2 trading days of last week went that positive. We're seeing the like of Process and Naspers up sharply, as like you said, thanks to the Chinese counterpart, which is Tencent, looking very strong right now after a not so great set of numbers last week, Wednesday or Thursday. I can't remember properly, but yeah, I'm just happy that the markets are starting off the week in a positive note.
Yeah,
maybe this is that center rally that we're looking for.
Oh, it's a little. Is it not a little
the
early?
Beginning of it.
Is it exactly? I was about to say.
Yeah,
it would definitely be a little early, but talking about people that have been there for most of the Santa rallies. Nearly 30 years at the helm of ShopRite, Christo Wiese deciding a year from now he's going to stand down. It was a turbulent AGM not so long ago, though.
Yes, I mean, you remember we spoke about his super voting shares that allows him, a lot of control of the business, and especially on the decision-making side of things. And then when it came, to the voting of whether he still stays as chairman or not, he then used those super voting powers, shares to put himself back into his chairman position. But he said he's retiring at the end of last year, like you're saying, or before the next AGM. I found this to be very interesting because shareholders were given the opportunity to buy these shares for about 3.2 billion rands, but they said no, these things are worthless, and then we use it against them. Then it's like, oh, they could do that. Of course they could.
Oh, what a story.
Now you know who's your daddy, right?
Exactly. That's exactly what the case is on that front. Look, this is a guy who really has had the smarts, right? Look, he is, however, dwindling when it comes to the way he does his wealth as well. Of course, Breit has fallen off quite significantly. Steinhoff has suffered quite a bit as well. Do you feel this is him sort of marking his way out of, let's call it, the investor space on a more active role? He is 78 after all.
Yeah, I mean, after 40 years of him and Whitey Person obviously running a very successful entity, which now has handed over the reins, I don't think he's actually leaving as a shareholder. I just think he's, taking a break, like you're saying, maybe spending a little bit more time with his money, or what's left of it. And, considering the fact that, like you're saying, the likes of Steinhoff and the smaller one, which is Breit, which is, holding assets like Virgin Active, is not doing so well. But I'm actually quite happy that he's become more involved, in terms of on an activist side of things when it comes to Breit, just to shake things up, to keep the guys on their toes there, to stay motivated. You want a shareholder that has a voice like that, especially if you're a shareholder yourself. You want someone who's going to, you seek for some action when things aren't going the right way. So I don't know. I don't think he's actually leaving now the country and going to spend, time with his money elsewhere. He's still going to be around. He's still going to be very active. Look, it's just, he's going to use his shares on a more active role, I think.
Look, according to Bloomberg, he's not even a dollar billionaire anymore, that is. He's around 752 million US dollars. I say only. Wow. That's still over 11 billion rand. So there's still a sizable amount.
Still much richer than you and I. Still much richer than you and I.
It might take a while to get there. But nonetheless, look, right?
Exactly.
Another one that's kind of taken hold is Telkom, Cell C, MTN. The entire saga just seems to be going in all different directions. Government says they don't know that Telkom actually has the idea of trying to buy Cell C. Blue Label says, oh, we didn't know that you wanted to be bought out by Telkom. So there's broken telephone and there's no telephone at all, yet these are mobile operators.
It sounds like musical chairs here. It feels like we've been here before. So let's discuss the roaming deal between MTN and Cell C first. Apparently, that's going to be renewed. The Cell C users don't have to worry. They'll still have 95%, of MTN's towers like they did previously. So that's not a problem, and they'll benefit, from the move from 3G to 4G, from 4G to 5G, etc., etc. But I think the bigger issue here is whether Telkom is talking a real game, or they're doing exactly what they did last year, where they said, we'll be interested to look at the books, but they didn't actually do that. And this is actually the reason why we're here today, and we're still carrying on in that space. I don't know, but it does kind of make financial sense if they don't acquire the book with the debt. There's going to be 22 or so million active subscribers that they can add directly into Telkom Mobile and actually put into their network and carry on maybe with this roaming deal with MTN, because MTN seems to be providing a good service there for them. Or it could be, looking at a competitor that's on his knees, and you kneeing him in the face while it's, he's literally crawling and needing help here. So I don't know which it is, but only time could tell here.
I certainly hope
I'm not making any bet on anything right now. But obviously, as an MTN shareholder, it will be amazing if the whole Cell C Telkom deal goes through, because you remember they owe us a lot of money.
Yeah, they certainly do. So you guys want that money back as MTN shareholders.
Exactly.
That's for sure. Look, let's go very quickly on to Saudi Aramco. Said to be the biggest IPO. It's the highest profit-taking company in the world as well. Now valued at 1.7 trillion US dollars at best.
US dollar. I don't even know how many zeros are in 1.7 trillion. I just have to work it out in my. It's like 12 zeros, 13 zeros.
Somewhere there.
I'm not quite sure. Yeah. It's quite interesting because it falls short of, you know, MBS's, or maybe let me say the whole kingdom's expectation of the valuation of 2 trillion US dollars. But 1.7 trillion is still the biggest by far IPO on earth, and it'll probably stay there for a very, very, very long time. And I mean, they switched in the deal and said, you know, they'll be very, you know, cash distributable in terms of the dividends. They're going to be very highly distributable there for the next 5 to 8 years to make sure that shareholders are happy. So you stand to make your money back in a very short period of time if you're a patient investor. And I mean 2035, which is where they estimated that, you know, oil is not going to be the new oil anymore in that year 2035. So it's a long way from where we are today, and at like a production cost of what, $10 US dollars on the higher end. And I mean, they've even seen you know, production cost of $3 per barrel. So no one can absolutely compete with these guys. They could ramp up as much oil as they want for as much as they want. So it's going to be very interesting for those shareholders who just want a nice yield to buy. This is basically a very interesting one to watch out for.
Good luck in trying to invest though in Saudi Aramco, because I hear it's only open to the Saudis or any other company that has been allowed by the Saudis to invest in there anyway. So quite an interesting one.
I need more than luck.
Also, actually, exactly, certainly. Bright, thank you so much for the time, bud. Appreciate it. Bright Kumalo, portfolio manager at Vestact Asset Management, joining us live there from the Johannesburg Stock Exchange.